People often tell me, Joe, you sure spend a lot of time on vacation. And the truth of the matter is that I do spend a lot of time overseas, but it's mostly working. So over the past years, I've spent a great deal of time meeting with artificial intelligence startups across the globe. And when I was in Moscow a couple years back, I met with the world's most elite cybercrime fighting unit. And they taught me all about how you catch hackers. And one of the ways you do that is with a honeypot, and that's pretty much what it says on the tin. So here at Nanalyze, when we post a video that's critical of a stock, and people come around and deride us for that, that's sort of a honeypot to see how many cheerleaders are out there. And we recently did a piece on NVIDIA, and we're critical of the other segments aside from data center. And we started that presentation out by saying the 4 worst words in investing are, this time it's different. So John Templeton said that. And somebody commented and said, well, this time it's literally different. So I wanted to talk a little bit about that today. So let's start with some ground truths. You're not going to get rich finding the next Microsoft. That's a fallacy. You're only going to start accumulating wealth when you have a defined strategy that you follow in good times or bad. And if you start changing your strategy and saying, well, this time it's different, then you've already lost your way. As we always say, it's about time in the market, not timing the market. So calling the top for any hype cycle is a guess at best. We don't try to do that. Now, we often say here that we're either on the cusp of the greatest bull market known to mankind or going into one of the most shocking recessions ever seen. And that's kind of taking the piss, right? It's like saying, well, we're cautiously optimistic. It tells you nothing. The truth of the matter is we really don't care what happens because our strategy doesn't change. Now, we slightly prefer a massive recession as we have some cash to allocate. And as Warren Buffett says, if you're a net buyer, then you want stock prices to fall as low as possible. So our recent video on NVIDIA posed questions about their direction post-hype, and we had a tsunami of cheerleader backlash. And what these individuals need to realize is the efficient market hypothesis means value doesn't suddenly get created out of thin air. That's hype. And these people are starting to invest in AI stocks, not AI companies. We've been covering this for well over a decade now, so we understand the difference between those two. So today we want to talk to you about what hype looks like. And here's a classic example from the Motley Fool. And it seems like whenever there's hype around a technology, people's integrity goes out the window and everything becomes an AI stock. This one here, notice the choice of words. This magnificent AI stock is a screaming buy before it skyrockets. I don't know what would cause somebody to completely throw their integrity out the window and post something like this when they know full well, should know, that this is an irresponsible thing to say. And what they're doing is they're taking the broken clock approach, right? So if they're correct, they'll come back and rub it in your face. And if they're wrong, they'll sweep it under the carpet. I saw somebody on YouTube refer to, for example, NVIDIA saying it's only just begun. So whether or not that's true, they'll certainly remind you of it if they are. But what they're doing is promoting irresponsible behavior. You see this comment here, buying this stock is a no-brainer. They're talking about Meta. I didn't know Meta was an AI stock. Meta uses AI. You wouldn't classify them as an AI stock unless you would also throw in most of the companies on the page that you see here. So here are the largest companies in the United States. What you need to notice here, and people often get this wrong, they say, well, I returned 150% on my portfolio in the last 5 years investing in tech stocks. Sounds grand, right? But they actually sucked because if you invested simply in the NASDAQ, you would have returned more at 160%. So when you look at these returns here, these are the 5-year returns for the largest companies in the United States. Subtract 160% from each one to see what their true performance is, and look at how NVIDIA stands out. So a 5-year performance of 1,828%. So that's rather remarkable. So if NVIDIA increases 32% more, it's going to be the largest company in the world. And our recent piece looked at the difference between NVIDIA and Microsoft, mainly being that NVIDIA has a dominant data center segment accounting for 83% of revenues. They need to shore up those other segments so that if the demand for data center equipment should ever fall through, that they have supplemented the rest of their business to deal with that. Now, if you're a FOMO speculator who recently jumped on board, you're thinking about buying NVIDIA, dollar cost average, don't try and time the market. Articulate your thesis beyond 2 sentences. That seems like all the people that came around commenting on our last video were capable of. If it drops 50% because they missed analysts' lofty expectations, are you going to be sad or happy? Ask yourself that. You better say happy, because then you're really excited about the prospects of the company and you're going to back up the truck. Or if you're dollar cost averaging, you're just going to maybe add a little more. You're not going to try to time the market because maybe it'll fall even more. People seem to forget that when the dot-com crash happened, that names like Cisco were down 80%. Imagine that, right? Imagine NVIDIA drops 80%. Boy, you better be buying, right, if that happens. So whatever NVIDIA happens to be looking at gets the spotlight. And I think a great example of that would be the 13F form that NVIDIA filed with the SEC. This was on February 14th of this year, and it caused this company, nano-x, to jump 100%. Why? Well, so nano-x develops a new sort of X-ray. We've covered them. You can search our website. We've written multiple pieces about their technology and the company. But this 13F simply was a form NVIDIA filed that showed publicly traded stocks they held for whatever reason they decided to file it. And Bloomberg correctly stated, we got a lot of questions on YouTube and from subscribers asking, whoa, nano-x, NVIDIA's investing in them. Not true. So you need to put this stuff into context. Bloomberg did a good job here. The disclosure of the stake caused the stock to double, but this stake stems from nano-x purchasing an NVIDIA-backed firm. And when we actually look at the details, it's so important. Nobody does that anymore because it's a lot of hype. So you see nano-x imaging here. This is the form. $379,000 investment by NVIDIA. I think a lot of the people on this channel have bigger portfolios than that. So it was absolutely meaningless. It was something that simply existed. It hasn't been cleaned up. You can tell NVIDIA's job is not managing a portfolio of stocks. This just happens to be holdings they have of publicly traded stocks for whatever reason. And we can go down this list and describe. Remember, they were going to purchase ARM. That's why they happen to have ARM shares. But I wanted to touch on the Soundhound holding. Look at this article from the Motley Fool. It's just, it's embarrassing these days. And they do have some gems. We'll look at one, but most of what they put out is tripe. Could Soundhound AI stock be a better buy than NVIDIA in 2024? Forget about context. They just vomit out whatever whatever on the top of their heads. Now, if you want to read some of the pieces that we're putting out about the companies that you see here, just follow us on Twitter at Nanalyze Tweets, please. There's a link in the upper right. We'll be putting out articles and information on the companies we're talking about today. So Soundhound, again, we've written about this company before. You can see that it was up 17% when I was putting together this chart. And the NVIDIA's legacy investment was actually from 2017, so that's old news. The stock is now up 179%, giving them a simple valuation ratio of 27 versus NVIDIA at 26. So they're actually more richly priced than NVIDIA now.
So it doesn't make sense.
This simple valuation ratio, we're going to touch on that later, is simply market cap divided by annualized revenues. Because most of these companies aren't profitable, you need an apples-to-apples comparison. Here's the article. Soundhound raises $75 million from NVIDIA, Samsung to scale voice-enabled AI tools. Sounds really cool, right? And then there's the date, January 2017. So this is old news, yet the stock is up, 170%? That's called hype. And this isn't our first hype rodeo. Look at here. This is from just over a year ago, a piece we wrote. Soundhound stock rides the AI hype train. You could search our website for that. And look here, the 1 month returns for select quote-unquote AI stocks, because some of these aren't. You have Soundhound, they're 200%, Big Bear, 549%, C3, 112, and the list goes on. And you look at the news items. So I just pulled, 8 or 9 news articles that had AI stock in them, and just look at this stuff. No-brainer AI stock. I didn't know Cloudflare was an AI stock. We've covered that, and it's certainly, we wouldn't consider that. Goldman's pointing to Micron being an underappreciated AI beneficiary. Well, everybody should be an AI beneficiary these days. 5 AI stocks you missed. It's just the investing community now is full of hype around AI. And look no further than these 5 names that we see here. When you think about performance, you always need to use a benchmark. So we use the NASDAQ year-to-date return of 8%. So you would expect most technology stocks to be returning within that range. But look at the range that we're seeing here, from 200%, 166%, 87%. So these are stocks, and you can tell by the charts, that are seeing a lot of AI hype recently. And here's the names. Look at going diagonal there. Airship AI, Soundhound AI, Bear AI. This is AI hype. And look at those returns. Now, the other 2 names here that don't have AI have some legitimacy to them. So you have Palantir and NVIDIA. Of course, we need to put into context the reasons why these stocks are moving the way that they are. So let's go ahead and do that. And what we can do is look at the growth over the past 4 quarters. So for AISP and Soundhound and BBAI, those are the ones that moved most dramatically, over 100%. We would expect to see very strong growth. And for 2 of them, there is no growth. So that doesn't make any sense. For Soundhound, there is some growth, but we need to put that into perspective, and let's do that. So when we look at Palantir, Soundhound, and NVIDIA, we can say, all right, the last quarter of revenues versus 4 quarters ago, what sort of growth are they seeing, and what sort of monetary value is that? So Palantir saw 16% growth, not the sort of growth that the instant analysts out there are screaming about. That's yet to be seen, but certainly they're growing. $83 million difference there between the last quarter and 4 quarters before that. And then look at NVIDIA in the upper right. So $14 billion, 207% growth. It's incredibly difficult for a company that size to grow that quickly. And that's why NVIDIA has enjoyed such an appreciation in share price. We actually covered that in a video that you can always torture the data and make it say whatever you want, but you can point to analysts' midpoint expectations and forward priced earnings and justify their valuation, of course. But in hype, you can always justify what's happening, right? Maybe this time it's really different, and we'll talk about that. But when you're going to invest in any of these companies, and some of you are inevitably going to, know your limits. And here what I've done is looked at their simple valuation ratios over time for 3 of these stocks, NVIDIA and Palantir across the top. Our cutoff is 18. We would never pay more than 3 times our catalog average. So set a cutoff, and you can use price to sales. We use simple valuation ratio. And then, you can take the average of that over a year and say that's your target. And remember, they always revert to the mean. You can see that here. So know your limits and don't overpay. And this article by the Motley Fool I came across is actually halfway decent. And this gentleman, Sean Williams, should be commended for writing something that's somewhat sane, and says, investors have overestimated the adoption and or utility of every next big thing investment for the past 30 years. I thought that was really interesting. And he lists some out. The advent of the internet, okay, .com, that's the easy one to point to, but what about genomics, housing, China stocks, 3D printing? Everybody remember that one? That was about the time that we started kicking off Nanalyze research. Cannabis stocks, we all know that. Electric vehicles, mainly in SPACs. Blockchain, the metaverse. And then we asked around the office, we came up with some more. Gene editing, graphene, carbon nanotubes, solar, LEDs, nano, synbio. So here's a question for the audience, and put this in the comment section. Can you name a technology that didn't initially overestimate adoption and utility? If you can think of one, we couldn't think of one, put it in the comments section below. So the problem with the Fool is that you have to search really hard to find good content like this, because what you'll inevitably end up seeing is a bunch of content that looks like this. It says, this artificial intelligence stock could double, and it's way cheaper than NVIDIA. And then they say Opera. I mean, this is the sort of misleading dribble that only a fool could conjure up. And when you look at the comments on this piece, people say, well, no, NVIDIA GPUs are leading edge, or it's not growing as fast as NVIDIA, completely missing the point. You have a browser company with a planned generative AI plugin and the leading provider of AI chips. This is an apples to orange comparison. And now, I know what will happen. So as a result of this article, Opera will go up 30% on AI hype, and people will come by and leave the ultimate showstopper comment. this didn't age well. So to the this didn't age well people, if a stock price goes up 30, 50, 100%, they'll come by and leave a lazy comment. And we see more and more of these in times of hype. It exhibits bog standard intellectual laziness. Now, the more bullish you are, the more critical you should be. And what the truth of the matter is, most investors don't capitalize on paper gains in times of hype. We see this over and over and over. And oftentimes they'll be members of some community stock cult or just cheerleaders in general. And when you're in a bull market, everyone's a BSD, everyone's a winner. But ask yourself this, all right? What bet would you make here? So you have to bet in two different directions. History repeats itself, meaning that the technology is hyped like any other technology. Certainly not trying to call it top, but it's hyped at the moment. And this time it's different, that the hype is justified and that Sir John Templeton was full of it. Now, the better way to look at this is not a binary, but to say, if we were going to give you money if you were correct, what percentage would you give each of these things to be correct? So let's say there's going to be a hype adjustment characteristic of other technologies. We might say, well, there's a 75% chance that'll happen. In other words, history repeats itself, okay? Let's say that there's going to be a .com sort of 80% drop of the type I described earlier with Cisco, okay? Something that pushes you into what finance people call value at risk. It's a black swan. Well, let's give that a 15% chance, right? Or this time it's different and that everything keeps shooting to the moon and stays there. So don't say when you think about this what you wish to happen. Say what you think the data tells us. And what we see is what Greenspan calls irrational exuberance. So no FOMO. AI stands to benefit all companies in all industries. If you're somebody with a safe strategy or one that makes sense in bull markets or bear markets, you're going to benefit either way. Broad market exposure, frankly, is the safest way to get exposure to the AI boom. There is no next NVIDIA. There's a next something else. So what a lot of these people who jump onto the hype train will do is get some paper gains and then end up writing those into losses. Figuring out when to sell a stock is the hardest part. You need to have predefined rules. That's the best way to approach this. And don't think you're going to play musical chairs with momentum stocks or options. I can promise you that won't end well. And if you do make money, it's easy come, easy go. And when you finally have your ass handed to you, Uncle Joe's going to be there for you. You can come join our community where people are focused on accumulating wealth. And don't worry, we've all done this. Get the lessons out of the way as quick as possible. Make those mistakes. And I like this quote here, once it works, nobody calls it AI anymore. And you need to think about that when you look at these companies talking about all their big plans for AI. And the ones that have been silently utilizing AI for a long time, the likes of Amazon or Google or NVIDIA that's been working on this and for a very long time, Synopsys as well. There's a lot of names that have the OGs of AI. But what we won't try to do is call a top here because nobody can. Now, if you're interested in our piece on how we went about justifying NVIDIA's lofty valuation, something for the bulls out there, you'll want to watch this piece next. Please make sure to follow us on Twitter, subscribe to our channel. Thanks so much for taking the time to watch this today.